Welcome to the tutorial on financial statements. In this tutorial, we are going to learn about the process of preparing a multiple step income statement, a retained earnings statement, and a statement of financial position, which is sometimes known as balance sheet. Previously, it is known as balance sheet, but nowadays it is known as statement of financial position. For the purpose of preparing the income statement and statement of retained earnings and statement of financial position, here we can see some information. You can see there is a trial balance and there are some additional information from where we need to prepare the income statement, statement of retained earnings and statement of financial position. For the purpose of easy understanding, I am going to show it sequentially. I will transfer the amount from the trial balance to the income statement, retained earnings and statement of financial position at a time. In income statement, we show all the revenues and we deduct all the expenses to get the net income, and after calculating the net income, we transfer the amount of net income to the retained earnings statement, which will be added with the equity, and finally we will prepare the statement of financial position where we will show all the assets and all the liabilities and equity. And you can see assets can be presented as current assets, investment, property, plant, equipment, or any intangible assets. On the other hand, the liabilities can also be presented as current liabilities, long-term liabilities. Let's start. For your easy understanding, I am going to transfer the amounts from the trial balance to the statements one by one. The first amount we can see cash, which is a current asset. So I am going to show it in the statement of financial position as an asset, current asset. Cash is a current asset. And from the question we can see the amount of current asset is 10,000. So I am writing the amount 10,000 as cash. The next amount is accounts receivable. So I am going to transfer this account receivable, total 50,000. The next amount is notes receivable, which is 15,000. After that, we can see the next amount is merchandise inventory, which is a parts of cost of goods sold. This amount will be required to calculate the cost of goods sold. So cost of goods sold should be shown in the income statement, but for the purpose of simplicity, I will not show all the amounts in the income statement. I will use notes to calculate the amounts, and the amount will be transferred to the required statement. Let's see how to prepare the notes. I am going to prepare the note of cost of goods sold. To calculate the cost of goods sold, we need to have the merchandise inventory. From the question we can see the amount of merchandise inventory is 1,25,000. For the purpose of identification, we are going to provide the notes number. Suppose cost of goods sold is notes number 1, So in note number 1 we are going to prepare the cost of goods sold, and for the purpose of preparing the cost of goods sold we have taken the amount opening inventory of merchandise, which is 1,25,000. Then from the question we can see the next amount is purchase, which will be added with the inventory. The amount of purchase is 7,50,000. So there is another amount which should be added with the purchase, that's why I am taking another column. We have taken another column because we need to adjust the purchase return and purchase discount to get the net purchase. But as I have told you that I will show one by one, that's why I can see in the question the next amount is sales. So sales will be shown in the income statement. But for the purpose of simplicity, I mean for the purpose of keeping it simple, I will prepare another notes for sales because there are some adjustment with the sales. We can see from the question the amount of sales is 15 lakh. From the question we can see the next amount is purchase return and allowances, which will be adjusted with the purchase. The amount of purchase return and allowances is 10,000. So from the purchase we will deduct purchase return and allowances, as well as we need to deduct the purchase discount. So here the purchase amount is 7,50,000. From this 7,50,000 we will deduct the purchase return and purchase discount. From the question we can see there is another amount transportation in, which should be added with the purchase, but since I am showing you one by one, so we have taken amount up to this place. Now we are going to take this amount, sales return and allowances. This would be adjusted with the sales. So amount of sales return and allowances is 45,000. So here we will deduct sales return and allowances. The amount is 45,000. And from the question we can see the next amount is sales discount, which will also be adjusted with the sales. The amount of sales discount is 35,000. So after deducting the sales return and sales discount, we will get the net sales. So from the keyboard we are inputting equal sign, then clicking here, then minus, then clicking here, again minus, clicking here. Total amount is 14,20,000, which is net sales. Here the amount of net sales is 14,20,000. You can show this calculation directly in the income statement, but for the purpose of simplicity we will just take the net sales to the income statements. Net sales. Here we will input the amount of net sales, but for the purpose of easy transferring we will use cell link. For the purpose of using cell link, suppose we are going to get the net sales amount from the notes to the income statement in this cell. So that's why I'm clicking equal sign here. Then from the notes I will click on this amount, then I will press enter from the keyboard. So if I do this, the amount will be transferred, which is known as cell link. I have created a cell link from the notes to the income statement. So for the purpose of easy identification, we have identified this note as note number 2. So we will show this in the note number 2. From the question, the next amount is land and building, which is 6,50,000. But with this land and building, there is a amount of depreciation. Although it's a part of property, plant and equipment, but for the purpose of showing simplicity in the main statement, we will prepare notes, because with the land and building there is an amount that is known as accumulated depreciation or depreciation. That's why we will create a note for this land and building. Here the amount of land and building is 6,50,000. Since I am showing the amount one by one, that is why now I will not show the amount of depreciation. I will show one by one. That is why now I'm going to use the next amount, which is fixtures. With the fixtures there is also another depreciation amount. That is why I will show it separately as a note. So I'm going to get another note, fixtures. Amount of fixture is 2,25,000. So from the question we can see the next amount is accumulated depreciation, land and building. So this amount will be deducted from the land and building. We can see the amount of accumulated depreciation, land and building is 1,50,000. So this is the previous accumulated depreciation, but this year there is another amount of depreciation which should be adjusted. We can see 5%. So from the question we can see the total amount of land and building is 6,50,000. If we calculate the 5% depreciation on land and building, total amount is 6,50,000. 5% depreciation, which is 32,500. That means in 2023 the new depreciation is 32,500. The previous amount of accumulated depreciation is 1,50,000 and new depreciation in 2023 is 32,500. So to get the net land and building, we have to deduct the depreciation and accumulated depreciation. So from keyboard we are inputting equal sign, then clicking here, minus, then clicking here, minus, clicking here, then from the keyboard enter. This is the net amount of land and building. So we will transfer this amount from note to the financial position as a long-term asset. So land and building, since we will transfer the amount in this place, so it is the statement of financial position and we will show this amount in this place. I am inputting the equal sign from the keyboard Then from the note we will click here, then from keyboard press enter, then the amount will be transferred automatically. So this is called cell link, that is used to transfer the amount of need land and building to the statement of financial position. And we can see this is the note number 3. So we will put it here, note number 3. Next, from the question we can see the next amount is accumulated depreciation fixtures, which is 1 lakh. We will show it in the notes. So this is the fixtures. We will deduct the accumulated depreciation. We can see the amount of accumulated depreciation fixtures is 1 lakh. So we need to adjust another amount. From the additional information we can see the new depreciation for the fixture is 10%. If we calculate the new depreciation, we will apply 10% on this 2,25,000. So this is the 10% amount, 22,500. So the depreciation in 2023 is 22,500. So to get the net fixtures, we will deduct the accumulated depreciation and depreciation in 2023. So we are pressing equal sign from the keyboard, then clicking here, then minus sign on the keyboard, then clicking here, and again minus sign, then clicking here, then press enter. So the net amount of fixtures is 1,02,500. So this amount will be shown in the statement of financial position. So we are taking this amount fixtures. So since this amount will be transferred here, so we are inputting equal sign from the keyboard, and I'm going to the notes, and this amount will be transferred. So I'm clicking here, then pressing enter from the keyboard. That means it will automatically transfer the amount, and we have taken this amount from note number 4. So I am indicating note number 4. So here we can see notes. So note number 3 for land and building, and note number 4 for fixtures. So in this way we are transferring the property, plant and equipment. Sorry, we have done a mistake. We are showing the property, plant, equipment under the long-term liability, but these are the property, plant, equipment. So I am transferring it here. Okay, so land and building features, these are the amount of property, plant and equipment. So initially we shown in the long-term liability, it was a mistake. However, we can see amount of property, plant, equipment, land and building features. From the question we can see the next amount is office supplies. This is a amount of current asset. So we are showing here office supplies as current asset. The total amount of current asset is 15,000. So 15,000. Then from the question we can see the next amount is marketable securities. It is another current asset, and the amount is 45,000. Then from the question we can see the next amount is delivery equipment, which is another long-term asset or property, plant and equipment. So with this long-term asset or property, plant and equipment, there is a amount of depreciation which is 15%. That's why we will prepare another note. So we are showing it here, delivery equipment. So total amount of delivery equipment is 2 lakh. So with this delivery equipment we need to adjust the accumulated depreciation and depreciation. But from the question we can see there is no accumulated depreciation, but there is a depreciation which is 15%. So if we calculate the amount of depreciation on 2 lakh multiplied by 15%, which is 30,000. So this is the depreciation. So if we deduct this 30,000, equal sign, clicking here, and minus, then clicking here. So 1,70,000, this is the net amount of delivery equipment. So we are transferring this amount to the financial position statement as a long-term asset. So delivery equipment under the property planner equipment. Since we will transfer the amount here, so I am clicking equal sign here. Then from the notes, I am clicking on the amount, then pressing enter from the keyboard. So I have transferred this amount as a cell link. So since I have transferred from note number 5, I am indicating 5, note number 5. Then from the question we can see the next amount is notes payable, which is a part of liability. So I am going to show it in the statement of financial position as a current liability, notes payable. Then we can see the next amount is accounts payable, which is another current liability. So I am showing it 75,000 as accounts payable, which is current liability, and I am showing it in the statement of financial position under the current liability section. Then from the question we can see next amount is mortgage payable, which can be considered as a long-term liability. So I am going to show it under the long-term liability. The amount of long-term liability is 50,000, which is mortgage payable. Then from the question we can see the next amount is transportation in, which is a part of purchase. So we will add this amount with the purchase to get the net purchase. So in our notes, initially our first note is purchase. So here this transportation in will be added with the purchase. Total amount is 20,000. Now I will show the net amount of purchase by deducting the purchase return, purchase discount, and I will add the transportation in with the purchase. So I am clicking equal sign from the keyboard, then I am clicking here, then deducting 10,000, again deducting 25,000, then I am adding 20,000, then pressing enter from the keyboard. So here that net amount of purchase is 7,35,000. This is called net purchase. Then I will add this amount of net purchase, which is 7,35,000, with the opening inventory, which is 1,25,000. So if I add the opening inventory with the net purchase, we will get the cost of goods available for sale. So I'm clicking equal sign, then I'm clicking here, then plus this amount. So total amount of cost of goods available for sale is 8,60,000. With this 8,60,000, we will deduct the closing inventory. From our question, we can see the amount of closing inventory is shown in the additional information. We can see a physical inventory of merchandise on hand at December 31st, 2023 showed goods worth taka 1,20,000, which is known as closing inventory of merchandise. That is why we will take this amount as a closing inventory, and we will add this. So this is the inventory on last date of the particular period, I mean 31st December. That is, it's a closing inventory, and we will deduct this closing inventory from the cost of goods available for sale to get the net cost of goods sold. So we are going to deducting this merchandise inventory from the cost of goods available for sale. So I am clicking equal sign on the keyboard, then we will click on here, then deduct 1,20,000. So this is the net amount of cost of goods sold, which is 7,40,000. So this is the cost of goods sold, and this amount will be deducted from the sales to get the gross profit on sales. So I am deducting the cost of goods sold from the sales. So since I have prepared a notes, So I will transfer the amount from the notes to the income statement. So I will place the cost of goods sold amount here. So I am inputting the equal sign from the keyboard. Then I'm going to notes. Then I'm clicking here. Then after pressing enter from the keyboard, I will transfer the amount. So this amount is taken from the note number 1. So I'm indicating here note 1. Now I will deduct the cost of goods sold from the net sales to arrive at the gross profit. So I am pressing equal sign from the keyboard. Then I'm clicking here. Then I am pressing minus sign. Then I'm clicking here. So this is the amount of gross profit on sales, which is 6,80,000. From this gross profit, we will deduct all the operating expenses. So there are two types of operating expense, which is selling and marketing expense, and another one is administrative expense. So we will deduct all the selling expenses and administrative expenses as a operating expense from the gross profit to get the income from operations. From the question we can see our next amount is officers salaries, which is a part of administrative expense. So I am showing it in the income statement under the administrative expense. But since I am going to make it simple and I'm preparing the notes, so for the administrative expense I can prepare another note. The first amount is officer salaries. The amount is 1,10,000. The next amount is office salaries, which is another administrative expense. The amount is 60,000. And the next amount is sales salaries, which is a part of selling expense, but since I am preparing the notes for making it simple presentation in the main statement, that's why I will prepare another notes for the selling expense. So amount of sales salaries is 80,000. Then you can see the amount of advertising is 60,000, which is a part of selling and marketing expense, which is 60,000. Then the next expense is delivery expense. Delivery expense is a part of selling expense, but from the question we can see there is a accrued expense on officer salaries, office salaries, delivery expense. That is why I need to add this amount. So delivery expense 15,000. This amount will be added with the main amount, delivery expense 50,000. So from the question we can see there is also accrued expense on officer salaries, which is 10,000. So we are going to add this 10,000 with the previous 1,10,000, which will be total 1,20,000. And from the question we can see another accrued expense, which is officer salaries. The amount is 5,000. Add this 5,000 with the 60,000. Total amount will be 65,000. One important thing we have to take note that we have to show double impact for all the additional information. Although I have shown one impact for all the amount, but this will be shown in another places. I will show one by one. Just I am completing the full question one by one, and at the end of the tutorial I will show how to provide double impact for all the additional information, because these are the adjustment, and for all the adjustment we need to prepare the adjusted entry and adjusted trial balance. But since we are doing the final statements without doing the adjusted trial balance, that is why all the additional information will have double impact. I will show it one by one. Just you have to keep in your mind that there will be double impact for all the additional information. However, from the question you can see our next amount is utilities expense, which is a part of administrative expense. The amount is 15,000. Next, the amount is rent expense, which is a part of administrative expense. The amount is 30,000. After that, we can see there is a dividend income. Normally, we have seen that this company generate their revenue from sales. That is why this dividend income will be considered as other income. So this income will be shown in the income statement, but as a other income. So this is the normal income from operations. I will show it as a other income. The amount is 30,000. So I am showing it in the income statement as a other income. If you ask me what is other income, normally the company establish their purpose. We can see they generate the revenue from sales. Here, dividend income is one kind of non-operating income. That is why it is shown under the other revenues and gain. Then from the question you can see the next amount is investment in Uttara company. So it's an investment. The company name is Limas Lighting Limited. This company has invested their amount, so it will be considered as a asset. So investment. So it will be shown in the statement of financial position under the investment. The amount is 1 lakh. And the next amount is dividend, which will be shown in the statement of retained earnings. We will deduct this amount from the opening retained earnings. That is why I am showing it in the lower side, dividend 1 lakh. So this dividend will be deducted from the opening retained earnings. After that, we can see the next amount is common stock, which is a part of equity. So we will show it in the statement of financial position as a common stock, and the amount is 6 lakh. After that, we can see the retained earnings, which is from January 1. That means it is the opening retained earnings. So we will show it in the initial stage of the statement of retained earnings. Amount is 2,15,000. So we will show it here. So with this retained earnings, we will add the net income, or we will deduct the net loss, which will be arised from the income statement. However, after finishing the income statement, I will show how to transfer the net income or net loss to the retained earnings. From the question, the next amount is interest, which can be considered as other expense. So in the statement of income statement, we will show it as a other expense. So non-operating expenses and losses will be shown as other expense, which is interest. The amount is 5,000. But from the additional information, we can see interest on mortgage due 5,000. So it's a due amount which should be paid, and it's another expense. So we will add this 5,000 with the interest due. So this 5,000 is taken from the question, and from the additional information we can see another interest expense, which is 5,000. so I'm adding it again, 5,000. So total amount of interest expense is 10,000. So I can also prepare another note for interest expense, but due to time saving I have shown it as a added amount with the previous one. So from the main question we have transferred all the amounts. Now we will show whether we have transferred this amount. We can see the physical inventory of merchandise is 1,20,000. This amount is shown one time, but as already I have told you that all the additional information will have double impact. So this 1,20,000 is shown in the calculation of cost of goods sold. Here you can see merchandise inventory, closing inventory 1,20,000. So I have shown it one time, so I have to show it again, so it will be shown in the current asset merchandise inventory. So this 1,20,000 is the closing merchandise inventory. So I have shown it twice. The first one is shown in the income statement as a amount of cost of goods sold, which is transferred from here. I have shown the merchandise inventory 1,20,000. First one is here, and the second one is in the statement of financial position as a current asset 1,20,000. Again, we have to show this amount. We can see office supplies unused 5,000. So since it's a unused office supply, that means it should be shown as a asset, and since this amount is unused, that is why in the statement of financial position we have shown that total amount of office supplies is 15,000. That is why we need to adjust it. So from this 15,000, the amount of 10,000 is used and the remaining 5,000 is unused, which is current asset. So since the office supplies unused amount is 5,000, that means the remaining amount 10,000 will be shown as a expense. So in the income statement we will show it in the administrative expense, since we are preparing a notes for the administrative expense. So for office supplies, so initially we have seen that the office supplies amount is 15,000. From this 50,000, this 5,000 is unused, that means the remaining 10,000 is expense for the period. Okay, so from the additional information we have seen that we have shown double impact for this 1,20,000 and we have shown double impact for the unused supplies. This 5,000 as shown as asset and the remaining 10,000 as shown as expense. We can see initially I have shown 15,000 as asset, but from the additional information I have observed that only 5,000 is remaining. That means the remaining 10,000 is a expense, which will be shown as a administrative expense 10,000. So from the additional information, the next amount is interest accrued on investment, which is 7,000. So it's one kind of revenue, accrued revenue. So accrued revenue is one kind of current asset. So this 7,000 will be shown as a accrued interest revenue, which is current asset. So in the income statement under the current asset, and since we have to show double impact for all the additional information, that is why in the income statement this accrued interest revenue will be shown as other revenue. So I'm deducting the accrued word, because whenever you are using accrued word it will be shown as current asset, but it's a revenue, interest revenue on investment, which is 7,000. The next additional information is depreciation on land and building. Already this 5% has been shown in the property, plant, equipment under the land and building notes. Since we have shown it this depreciation 32,500 is shown one time, so we have to show another impact. It's an expense, so this amount should be shown as a expense. So since I am preparing another note, administrative expense, so this amount is a expense under administrative expense, which is depreciation on land and building. So here it's an expense, and here that is the amount of accumulated depreciation. So I have shown double impact for all the additional information. Again, we can see interest on mortgage due 5,000, so it should be shown twice. Already this 5,000 has been shown under the other expense and losses as interest expense, but since it's a due amount, so it's a liability. So accrued interest on mortgage is a liability, which should be shown as a current liability under the statement of financial position. So interest on mortgage has been shown twice. Here it's a liability, and in the income statement it is shown as a expense, this amount. From the question, the next amount is depreciation on fixtures and delivery equipment. So this amount already one time is shown. 10% fixture depreciation has been adjusted with the fixtures, but since it's a expense, so it will be shown as a expense. So it's a fixtures, we are considering these fixtures are the part of showroom, so as a part of sales expense we will show this depreciation expense as a selling expense. So 22,500 depreciation one time we have shown as a accumulated depreciation, and in the second time we will show it as a expense, and we will consider it as a selling expense. Since we are preparing a note on selling expense, so I am showing it here. And here we have to show the added amount 50,000 and 15,000, total 65,000. However, so we have shown double impact of the depreciation of fixtures, and we have to show the double impact on delivery equipment. Already this 15% delivery equipment depreciation has been shown in this place, so again this amount should be shown as another expense. So in the income statement we will show it, since we are preparing a note for the selling expense, so we will consider it as a selling expense, which is depreciation on delivery equipment, which is 30,000. So we have shown the depreciation on delivery equipment as an expense, selling expense. And finally, the accrued expenses office salaries has been shown one time. We can see office salaries 10,000, this was added, so it's a expense which is accrued, that means it's a liability. So this all the expenses has been shown, and now these are accrued expense, that is why the second impact should be shown as a current liability, because accrued expense are considered as current liability. So accrued office salaries 10,000, so we are showing it under the current liabilities. Then the next amount is accrued office salaries, which is 5,000. Again the accrued delivery expense, the amount is 15,000. So finally we have shown double impact for all the additional information. Now we are going to conclude all the summation and deduction. So we can see we have prepared notes on administrative expense. So total administrative expense is going to be calculated here. So I am importing the equal sign from the keyboard, then I am clicking here sum then there will be a new window. You can click here to show that you are going to sum up these amounts, then click on OK. So this is the total administrative expense, which is 2,72,500. So I am going to transfer this amount. Since it's a note number 6, I am showing it under the notes. So I am going to transfer this amount into the income statement. So here administrative expense, note number 6. So I will transfer this amount here. So I am inputting equal sign from the keyboard, and I'm going to note, then I'm clicking here, then I'm pressing enter from the keyboard. So transferred. So as a student, if you want to show all the expenses in this place, so you can show in this way. But as a student, you can show it, then you can transfer the total amount here. But for the purpose of simplicity, I have created a note. So in total, I have shown that total administrative expense is 2,72,500. In the same way, I will transfer the total selling expense. So I have prepared another note, which is here. So I'm going to calculate the total amount of selling expense. So I am inputting equal sign from the keyboard. You can sum up all the amounts manually. Suppose clicking here, plus here, plus click here, plus click here, plus click here. So in this way you can prepare the total amount, but simply you can click equal sign, then click sum, then drag all the amount, then click OK. So in this way you can calculate the total amount. So total amount is 2,57,500. So you can transfer this amount to the income statement. So we can see these are the selling expense. So I will transfer the selling expense here. So I am inputting equal sign from the keyboard, then I am going to notes, then I am clicking here, then I am pressing enter from the keyboard. It will transfer here. So I have transferred it from the note number 7. So I am indicating as note number 7. So as you can see, we prepare note for keeping the main statement simple. But if you think as a student in the exam script you can write all the amount, then you can write the amount here, then you can show the total amount here. Okay, but for the purpose of keeping all the amount simple, I have created the note. That is why I am not showing the details. Just under the operating expense, we have shown the selling expense as well as the administrative expense. So we have prepared two notes. So in note number 7 we have shown all the selling expense, and in note number 6 we have shown all the administrative expense. So combinedly the selling expense and administrative expense are known as operating expense. So from the gross profit we will deduct all the operating expense, we will deduct selling and administrative expense. So here our gross profit is 6,80,000. From this 6,80,000 I will deduct the operating expense. So I am clicking here equal sign, then clicking here, then inputting minus sign, then clicking on selling expense, then clicking again minus sign, then clicking on administrative expense, then pressing enter, which is 1,50,000. This is the income from operations. So it is also known as operating income or income from operation, which is 1,50,000. With this 1,50,000 we will add the other revenue and we will deduct the other expenses to get the net income. So since I will show the net income here, so I'm clicking here. So income from operation, with this income from operation I will add the other income. So I'm clicking plus from the keyboard, then clicking here, then plus again, then clicking here, then minus other expenses. So ultimately the net income is 1,77,000. But in practical scenario, this amount would be considered as income before tax. From this income we will deduct the tax to get the net income after tax. But since in our math there is no income tax, that is why this is our net income. So this is the income statement. So here our net income amount is 1,77,000. This net income amount would be transferred to the retained earnings. So here we will add the net income with the opening balance of retained earnings. We will add the net income. So since we will transfer this amount to this place, that is why I am importing equal sign from the keyboard here. Then I am going to income statement. Then I am clicking here. Then I am pressing enter from the keyboard. It is transferred to the cell in the retained earnings. So now we will add this net income with the opening balance of retained earnings. But if there is a loss, we have to deduct. But whenever there is an income, we have to add. So I am going to add this amount with this amount. So this is the 3,92,000. From this 3,92,000, we will deduct the dividend. It's a expense. We provide dividend from the earnings, so we are deducting this amount. So from this amount minus this amount, so ultimately the closing retained earning is 2,92,000. So on December 31st, the amount of closing retained earning is 2,92,000, and we will transfer this amount to the statement of financial position as a part of equity. So since we will transfer this, so I will transfer the amount here. So I'm importing equal sign from the keyboard, then I'm going back, then I'm clicking here, then I'm pressing enter from the keyboard. So I have transferred this amount. That means from the income statement we transfer the net income to the retained earnings here. Then from the retained earning balance we will transfer it as a part of equity in the statement of financial position. Now we will add all the current asset. So I'm going to show the total amount of current asset here. So I'm inputting equal sign, then I'm clicking sum, then I am dragging all the current asset, then I'm clicking OK. So total amount of current asset is 2,52,000. Okay, so this is the amount of total current asset, and these are the property, plant and equipment. So I have shown the summary from the notes. So I am going to calculate the total property, plant and equipment. So I am clicking equal sign from the keyboard, then I am clicking here sum, then I am dragging, then I am clicking OK. So total property, plant and equipment is 7,40,000. So here our total current asset is 2,52,000, and total investment is 1 lakh, and total property, plant and equipment is 7,40,000. So the total asset will be calculated with the amount of total current asset, total investment and total property, plant and equipment. So I am importing equal sign from the keyboard, then I am clicking here plus, clicking here plus, clicking here. So this is the amount of total asset, which is 10,92,000. So this is the amount of total asset. So we have calculated the amount of total asset. Then we are going to calculate the total current liabilities here. So I'm inputting equal sign, then I am clicking. You can also sum up the amount by clicking one by one, plus here, plus here, plus here, then plus again. So this way you can click at the total amount, but simply we can prepare this amount in another way. Just clicking equal sign, then sum, then I'm dragging this amount, then okay, so same amount. So here the total amount of current liabilities is 1,50,000. So and long-term liabilities 50,000. So we can see the total liability. I'm inputting equal sign again plus this one. So we can see the total amount of liabilities 2 lakh. So and total amount of equity I'm going to calculate equal sign this one. So total amount of equity. So here total amount of stockholders equity is 8,92,000. So now we are going to add total liability and total equity in this place. So I am clicking here plus this one. So total amount of liability and equity. So our total liability and equity is 10,92,000. So from the overall scenario, we can see total asset is 10,92,000 and total liability equity is same 10,92,000. That means our total calculation is okay. So this is the so in this way we can prepare the financial statements in Excel sheet. So due to showing the Excel sheet one by one, it has taken long time, but if you prepare it on a note sheet, then it will take short time. But practically most of the organization which don't have any software, they prepare the financial statement using Excel sheet. So I have shown how to prepare the notes in the Excel sheet and how to transfer the amount of figures from the notes to the main statement. You can see this is the income statement. Initially we have shown the sales, then we deducted the operating expenses, then we deducted other expense and we added other revenue to get the net income. Then this is the retained earnings statements where we have shown opening balance of retained earnings, then we have added net income and we have deducted the dividend to get the closing retained earnings, and this balance is transferred to equity part. So this is the so here we have transferred the closing retained earnings. So in the statement of financial position we have shown all the assets, current asset, so investment and property plant equipment. If there is any intangible asset you can show here. In our math there is no intangible asset. Total asset is here and total liability here. So we can see asset are equal to the liability and equity. So it's a proof of mathematical equation that our total asset is equal to the liability plus equity. So there are two parts in the equity, common stock and retained earnings. So in this way you can prepare the math in the Excel sheet. As a student, if you think that you don't like the notes for the purpose of examination, you directly write this amount in the statement manually. But practically whenever you are going to enter into the professional life, if there is no accounting software, then you can prepare in this way. Initially you have to prepare the notes, because if you prepare the notes you can keep the main statement simple. You can see very simple. However, as a student in the exam script you can write the amount here, but you can also practice this one. You can prepare the notes first, then you can transfer the amount in the main statement. So this is the income statement, this is the retained earnings, and this is the statement of financial position. And I have prepared this math from this question. So this is the question and this is the income statement, this is the retained earnings, and this is the statement of financial position, and these are the notes that is calculated for keeping the main statement simple. Thank you.